Hello, and welcome to this KRS educational video concerning the implementation of new GASB Statements 67 and 68. During this video, I'll discuss the background of the new GASB standards, the effective dates of implementation, the provisions of GASB 68, and brief descriptions of net pension liability and pension expense. I'll also review what KRS will provide and audit issues to be aware of. Occasionally, accounting pronouncements can be difficult to both interpret and implement, and this video will help parse those terms. There is a glossary of common terms at the end of the video. First, a bit of background information. GASB stands for the Governmental Accounting Standards Board, which is the source of generally accepted accounting principles, abbreviated as GAAP, used by governmental entities in the United States. Founded in 1984, GASB's mission is to establish and improve governmental accounting and reporting so that the financial reports are both more useful and transparent for stakeholders. GASB releases statements, interpretations, technical bulletins, and concept statements to define accounting principles. GASB 67 and 68 are statements. Kentucky Retirement Systems is a pension plan that covers both multiple employer systems, such as KERS and CERS, and a single employer system as well, being the State Police Retirement System. Under the new GASB standards, agencies in all three systems will record their proportionate share of the net pension liability and pension expense in their ledgers. There are several reasons why GASB updated to Statement 68. First, another standard, GASB 34, states employers must develop full accrual financial statements. Next, GASB 4, a concept statement, states that liabilities need to be shown on the face of financial statements. Additionally, many stakeholders requested that the unfunded pension liabilities of agencies be disclosed more transparently. Last, GASB has emphasized more equivalent comparability among all retirement systems nationally, as well as firms in the corporate world and international finance. GASB Statement 67 replaces GASB 25. This standard establishes accounting and reporting standards for retirement systems, such as KRS. It went into enforcement beginning with the 2013-2014 fiscal year. GASB Statement 68 replaces GASB 27. This standard for the employers that participate in KRS goes into enforcement beginning with the 2014-2015 fiscal year, which begins July 1, 2014. To understand what GASB 68 means, it is helpful to get a grasp on the old statement, GASB 27. GASB 27 stated that the pension costs are directly related to funding. The pension expense for each employer was equal to the contributions paid, and that if the required contribution is not paid, there is an existing pension liability. The Comprehensive Annual Financial Report, or CAFR, discloses the KRS unfunded liability. The current valuation numbers will be used both for accounting purposes and funding purposes. However, the new standards change the way the pension obligations themselves are reported. Funding measures are still important, but not nearly as important as in previous financial statements. Unlike GASB 27, in GASB 68, the accounting and funding are no longer tied together. With the implementation of GASB Statement 68, there is a lot of new terminology being introduced into statements. First, the unfunded actuarial accrued liability is replaced by the net pension liability. The net pension liability is based on the entry age normal actuarial funding method minus the market value of the plan's assets. There are also additional financial statement notes that are required, and KRS will have this additional information disclosed in its CAFR. Employers must disclose their proportionate share of the net pension liability, as well as their share of the pension expense, in their financial statements. This is the biggest change as a result of GASB 68. The proportionate share of the liability and pension expense will be given to each employer by KRS based on the overall contribution percentages. The net pension liability, which is being added to the employer balance sheet, replaces the net pension obligation. The net pension liability bases asset values on their market value instead of the actuarial value. Again, KRS will give each employer their net pension liability based on the percentage of contributions paid in relation to all contributions. The discount rate is not equal to the expected investment rate of return, currently 7.75%. However, any benefit payments that are not expected to be funded will be discounted at a high-quality municipal bond index rate. The net pension liability will rise and fall from year to year due to the fluctuating market value of assets from year to year. The liability will be calculated at the end of the 2014 fiscal year, which is KRS's initial measurement date. This measurement period will be from July 1st, 2013 through June 30th, 2014. The pension expense is no longer tied to contributions from the employers. Instead, it is tied to the changes in the net pension liability from year to year. The calculation of the pension expense will be done by KRS's contracted actuary. As a result of the changes in asset values from year to year, this number will also vary from year to year. There's also a possibility it could be a negative expense. Much like the net pension liability, the pension expense will be calculated during the initial measurement period, which for KRS is the 2013-2014 fiscal year. The first set of data given to employers will be based on the numbers from July 1st, 2013 through June 30th, 2014. It is very important to note that the pension expense is not a contribution amount nor a funding amount. It is a derived number based on the service cost plus interest minus the expected investment returns minus the changes in liabilities, assets, plan changes, and assumption changes. All of these changes in annual investment performance will impact the annual pension liability calculations. As mentioned earlier, KRS will supply each participating employer into 3 systems with their proportionate share of both the net pension liability and the pension expense. There are different ratios that can be used, including a ratio based on the percentage of current payroll, the average of the payroll percentage over a period of past years, or a ratio based on a projected future payroll percentage. To give a broad overview how this works, we can see here a rudimentary spreadsheet. This is a retirement system with 9 employers and a total covered payroll of $8 billion. KRS has over 1,470 employers, so in reality the spreadsheet is very large. Each employer has a payroll of participating employees, and their percentage is determined by taking their total payroll against the overall system total payroll. KERS, SPRS, and CERS are calculated separately. In the example, Employer 1 has a very large workforce, and as a result has a covered payroll of over $4 billion. Their payroll is 51.54% of the overall system's total payroll. When we then apply the net pension liability, we take the total net pension liability of the particular retirement system, in this scenario it is $3.5 billion, and then assign it back to the employers. Employer 1 has 51.54% of the covered payroll, so they in turn are assigned with 51.54% of the liability, or over $1.8 billion, to put on their books. KRS must supply additional information for disclosure in the annual reports. There are schedules that cover a 10-year period, going back 10 years for KRS. Employers can build theirs prospectively. KRS also must apply schedules separately for KERS, CERS, and SPRS, as well as hazardous and non-hazardous plans for CERS and KERS. There will be footnotes that will indicate any significant changes in any of the numbers over those 10-year periods that would indicate a trend. KRS is tasked with providing the information to the employers for GASB 68. This includes the total pension liability, the net pension liability, total pension expense, and the proportionate share the employer is responsible for. KRS will also report back individual and collective contributions for each employer. Much of the changes brought forth by GASB 67 and 68 involve transparency. As such, each employer should be aware of particular aspects of the audit trail. KRS will supply the statistical information to each employer, so each employer needs to make sure they are comfortable with the numbers and that they can verify them through their own auditor or accountant. KRS's auditor is not responsible for the auditing of each employer's numbers. As an agency reporting official, you have the ability to help KRS in its mission to inform auditors and accountants about GASB 68. If your accounting and auditing are performed by an outside firm, you should notify them or your agency head that this information will be given and that they should notify KRS so this information makes it to the right people as promptly as possible. In summary, GASB Statements 67 and 68 require both employers and KRS to update accounting and financial reporting. The new accounting regulations are not tied to funding levels or required contributions. These contributions will continue to be set by the KRS Board of Trustees under advisement of their actuary under the KRS funding policy. I would like to thank you for watching this video about GASB 67 and 68 implementation. It is certainly not all there is to know about the GASB statements. If you have questions about GASB 68, you can send us an email at gasb@kyret.ky.gov. You can also learn more by visiting our website at kyret.ky.gov, and under the Employers section, we have a GASB page. You can also visit GASB's website at gasb.org. Thank you.